Alrighty, here we are. It is TGIM. Thank God it's Monday. And here we are. And there it is. And good evening, good morning, and good afternoon somewhere. All right, Doc here. All right, it's been an active weekend, so I'm kind of semi-exhausted, I guess, because I seem to be rambling. Let's see what's going on here. I did see some strength. We did go into the daily sells in some of the currency pairs, and gold went into a sell, silver went into a sell, and this morning they're trying to turn back up again, which is interesting. And I'm trying to get to my answers and questions so I can see if anybody is hearing me and if I can hear me. So where am I at here? Looking for it. We'll find it. We shall find it. It's in trading. There it is. Dukascopy webinars. There we go. And let's check and see what's going on. Okay, so it says it's live, and that looks like the charts. So we be live. All right, that's good. And I see. Who do we have here? Good. We got some people in there saying hi. Hi to you too. I'm just exhausted. I am exhausted. I accidentally ended up at a 3-person birthday party. So it was like, whoa, I just thought I was going over there for swimming and dinner. And the next thing I know, there are 3 birthdays. So there was lots of people, lots of action. Next thing I know, I'm drinking bourbon. It's like, what? And that's after a daiquiri. All right. So what do we got here? So let's see. I see Jody. How you doing? Hi to you too. And I like that one. Ara Diamond de Ferris. It's like a minerals person. I can dig that. I like minerals. Minerals are cool. Was it gold? Diamonds are really just a hard, compressed piece of coal, right? Yeah, black carbon. Exactly. Coal. That's so neat. I like that name. That's really neat. Diamond Ferris. That's so cool. Very cool. Very creative. I like that. Let's see, where are we at here? So there's oh, that was the Dow. Yeah, let's see the Dow. Now let's jump over on J4X. Let's shoot over to the Euro and see what the Euro's doing. Like I said, it went into a daily sell. I think yes, in line 14 there. Yes, it did go into a daily sell. And last I looked, I thought was it up? I think it was up. I'm not sure now. Let's double check that, and we'll go through all these things and see what is going on. Yeah, I guess so. It's down a little bit still. Okay, so it's still down. Nothing major. We widen it out. You can see a couple of reds there. We go over to Chicago Quant, move from Canadian for the moment back to the Euro. Where are we at here? Oh, let's do this. We got to go to Dukascopy on that one. So let's close that one. Close. And then open this one. There we are. Dookie Day 4X. There we are. And let's see what's going on there. How to get trading ideas part of webinar. Yeah, you know, that's one of the long conversations we have around here. You know, I'm from the era of exchanges or very active trading desks, and you know, one of the real problems in the 21st century. Not a lot of people are writing about it, and the problem is that we have to be proactive, and pretty much almost all new, to a great extent, a lot of new people over the last, say, couple decades are reading books from people who were on trading desks or they were on exchange floors, and they were reactive traders. In other words, the orders were coming right at them. They were standing in a particular pit or crowd where bids and offers were thrown at them every day, and their success was from a reactive universe. And since the demise, I guess you could say, or the evolution of exchanges to from just a few exchanges to a lot of exchanges, now we have to be proactive, not reactive. So in other words, we have to come up with ideas. We got to figure out you know, when to buy, when to sell, and what to buy and what to sell, and where to buy and where to sell, and so forth. So that's a good question, Jody. That's a really good question. So I see how to get trading ideas part of the webinar. Yeah, we look at what we do is we use quantitative analysis. We use our Chicago Quant. We've emulated our proprietary mathematics. Let's see, where's that at? That's Bitcoin. Let's try the euro on there. And there it is, the euro. And so what we do is we commingle uh, our J4X chart service here at the platform. We've commingled some public technical indicators that have about a 70-75% correlation to my proprietary math right here. And this is a weekly signal. This is a daily signal. And then, so what we're doing is we look at them, and we look at a lot of different products, and then we go, okay, is this in a weekly trend? And if it's in a weekly trend on the upside, well, no, everything's in a weekly trend somewhere along the line. But if it's in a weekly trend on the buy side, and then we get into a daily buy, then we see that as a high percentage that you can get long with success, and vice versa. If it's in a weekly sell and it's in a daily sell, you have a high percentage again of you can be in a short. And then what we have is, let's move the J4X over just a little bit, not a lot, but a little bit. Let's just move that over right there. And then what we have is we have what I call, no, upload, go away, and no, close. And then what we have over here on the Excel spreadsheet is we call it the fact check Excel sheet. And what it does is, in the case of now we're looking at euro, let's look at the euro. Okay, so that's line 14, and we update this every day. And so it has been in a weekly buy for 12 whole weeks right there. And each week, like if it stays in the weekly buy this week, next week it'll say 13 weeks. And it's in a daily sell just for one day now. Right there, went in there on Friday. So it puts us in a neutral stance. You don't want to be trading it long. You don't want to be trading it short unless you're offsetting something or taking a profit, but not initiating a new position. Now let's look at the let's look at the my Chicago Quant technology chart right here. And let me put my glasses on. Just make sure this is correctamundo. Where's it at here? This is euro, right? Yes, this is euro. Okay. And so you can see this little green line right here. That's when it initiated its weekly buy signal, which is right there on line 14. And what I'm doing is I'm explaining to you how we do a proactive decision-making process versus a reactive one that almost nobody does anymore, solely because the facilities for it don't exist. And so, and then there's also the daily sell. Now, in this case here, the daily sell should have a little red line like these other little red lines, so we can steal one of these red lines. All right, we'll make a new one. What the hell? And so it went into the sell on Friday, which was saying, okay, you can take a profit if you have been long from the last buy signal, which just happens to be there, and it had a very good trend and ran for a while. Now, why did it not go in a sell there? That's a good question. That should have been a sell and then a buy. So let's grab the buy there, move that over. It should have been just in a, I guess it must have gone into a sell for a day or two. So I guess it went into the sell here like that. And for a couple days, I'm not sure why we didn't update that. And then from there, it was up for a couple days, and then it went back into the sell on Friday. And you can see it's just a little more down pressure now. But you can't initiate a new proactive short because it's in a weekly trend on the upside. So instead, the only thing you can do is take a profit from it Friday, or you could have done the same thing here, taking a profit from this move. Chances are every trader has their own threshold of pain, and so waiting for the sell signal when you're long and you're making money is very tough. I mean, you might do it in tranches, slices. And by the time it gets to the sell signal, you might be only 10% long at that point. It's so hard to say. Every trader has their own threshold of pain. So now let me answer some more of your questions there. So it says, Jody says, how to get trading ideas apart from, okay, we answered that. I see a lot of exchanges show different prices of all instruments. Possibly so. There's 46 ECMs. It can be very confusing. A diamond ferrous says, let's see, refers to gold and diamond, i.e., gold, diamond bearing ground. I like mining stocks. Cool. Very cool. And that would be, so what did I say? Minerals, right? So I guessed it right. Cool. Because I like science. I'm really big on science. Okay, so my concern, how to contact you. Contact me, just come to the webinar here. I'm here every day. Every day. So I see a lot of exchanges show different prices. Okay. So which data we must take into action? Well, um, take into action. I think, did I just explain it to you? I can do it again. That's no problem. So what we do is we look at the weekly trend, which is right here, right there. We look at the weekly trends, and we look at the daily trends right here, and then we set up positions, and it depends on your desire of what you want to trade and capital risk and so forth. What point? So which data we must take into action? Not the point. Okay, tell me what the point is, and I'll try to answer it for you. You can make arbitrage from fast to slow. Arbitrage from fast to slow. Yes, I guess you could. I guess you could call it arbitrage. Arbitrage is what, the French word for, you know, taking something here and selling it there, and there's like a profit. So, like all brokers show different prices, high and low. Some do, some don't. No, I have the same problem. We have that once in a while too. You know, and you know, I was complaining to somebody about it over last week about, you know, about the idea that someone down in Texas, and I was saying that they were part of BlackRock at one time, and they had a hedge fund. We were talking about that, and I said, data comes in. No, wait a minute, that was somebody else. I'm sorry, that was a brokerage house in Chicago. I was talking to them about this too last week, like Thursday, Friday. What happens is that because of black pools and because the way the Securities Exchange Commission and the Commodities Futures Trading Commission now don't police their universe anymore, um, you know, to generate volume, they need volume. And their objective is to make volume exist. So what they do is they allow trades to go off without people seeing them. In other words, they're not disseminated the way the law says they're supposed to be, and then they put them in there later on. I guess through clearing data. I do trade only price action, so breaking high low is very much important. Oh, I agree. I agree. Matter of fact, I can give you physical proof. You know, for charting, I've been paper charting the Dow Jones Industrial Average, and I use the theoretical high and the theoretical low for 5 decades now, since 1980, right? No, 4 decades. And I'm telling you, it's a very important thing. I agree with you. I do. And in these times, it's even more important because um, technical analysis, when I started in the markets, was considered what they called voodoo. And now technical analysis is a main factor in trading. So, no, I agree with you. Hey, Sebastian, how you doing? Did I answer Aerodimon Ferris at all? Let's see, I don't know if I answered Aerodimon Ferris. Let me just double check. Gold diamond theory around. I like mining stocks. Oh, you know what we've been following is IAU, but we tried to use HUE or HUI. What a horrible trending product that is. And then I've traded the XAU out of Philadelphia off and on throughout the decades, and you know, that, remember that those indices have producers and they have miners. Oh, they're the producers, and then they have like smelters, and then they have silver ones, and they have some copper ones, and they have, like, you know, gold ones. So there's like 5 different sectors in some of those indexes. So they're very jumbly. That's nice, Sebastian. Welcome to the webinar. Well, we make arbitrage. Now, arbitrage is a very conjecture type of thing in the 21st century, as far as I'm concerned. It's not like the old days where you could buy from New York and sell at London or something like that, because it went on. There was not a lot of communications. So, there's a lot of conjecture what arbitrage is in the modern times. Um, I think that you can look at trading the same product in different places, and you can try to arbitrage and hope to get away with it, but the chances are very slim. Because the electronic markets and the brokerage houses are going to gobble it up before they let the public have their hands on it. So, does that make sense to you there? But what we do is we do slow down. Computers are taking advantage already of arbitrage. Humans can't compete. True, but it's worse than that. It's the brokerage houses and the clearing houses are taking more of it. So they don't even disseminate. And since the CFTC and the Securities Exchange Commission are not really enforcing those rules anymore, and so volume can be very nebulous at times. Highs and lows can even be nebulous. Remember when oil went minus $40 for a day? I had 37 and change as the low. So in other words, it went minus $37.75 or 50 cents or something like that. But as the next day came along, all of a sudden charts were reflecting a $40 minus. So dissemination of live transactions are being, let's say, sloppily distributed. That's for sure. Sebastian is another one. Let's see. So Sebastian says it's another one with three pairs. What's that? Oh, what did I miss? I must have missed something there. An arbitrage, you mean? Yeah, I looked it up one time. It's in trading, arbitrage is kind of defined more. Example: euro and dollar, cable and dollar, and euro and GBP. Okay, we follow all three of those. And right now, what's really weird, I think they're all in buys, which is really weird. Look at line 13, 14, and 15. And I think if we look at the Euro GBP chart, it was so close to being in a weekly buy. I mean, it was just like a hairbreadth off. Here's right there. See, it just tried, and you can see there's a little remnants of it today. But notice the price action is falling down, and this is the Euro GBP in our math. So, um, it's become interesting, that's for sure. Hence, a part of the reason I was involved in staying with Dukascopy or being with Dukascopy was the fact that you know uh, things like the CNBC and Bloomberg, they're not really reporting a lot of accurate information anymore. They haven't done, and then you can see it from their uh, ratings. Their ratings have been in the hole now for 10, 12 years now. Maybe a little bit longer. I mean, they're just no one's really watching them. They're just background noise at a brokerage house or at a trading floor somewhere. A private trading floor. They're just background noise to a great extent. They're not really providing a lot of information anymore. At this moment, I concentrate at the 8 majors. Yeah, I agree. So you're looking at them as 28 pairs. I think that makes total sense, Stefan. I think that makes total sense. Stefan, I totally agree with you. We talk about it now that there are. You can go back and look at some of our webinars. We talked about the idea that we're not really looking at pairs trades anymore. They're more like a three-legged stool. We've been saying that for, I guess, about, I don't know, a couple years now. We've been saying that. You're totally right. That's exactly what they are. And so let me make sure I've answered everybody's question. So computers are taking advantage already. Arbitrage. I answered that. That's good. I'm going to make sure that Diamond DeFerris is getting answered. Sebastian is being answered. And I agree with that totally. You guys are right on target. I think that's totally right. Mind if I take a bite of an apple? I'm eating some fruit at the same time here. All right, are. Yep. So that's why we have a fact check Excel sheet here. and it follows all the products, and it shows you our historical math, telling what the trend is. So you can see like crude oil is 14 weeks in a weekly buy, or something really insane. The Turkish lira now is 36 weeks in a weekly buy. And then you can see on there, someone must have started as a 1 over the last day or week. Let's see. There you go. Copper went into a weekly sell after 14 weeks in a buy on Friday. So you see a 1 right there on line, was that 8? Yeah, line 8. There's a 1. Soybeans went into a weekly sell last week too. There we go. After, I think it was like 11 weeks or 6 weeks in a buy. Something like that. 7 weeks, 5 weeks, something around there. And so you can see here, Euro GBP has 2 weeks now in a sell. And you can see what has been happening to the product since it went into the sell here on this week, right in here, is there's been downwardly pressured and it bounced up and downwardly pressure again. So I hope I'm hitting all the answers and questions and giving insight. And so what we do is we go look at the majors and we try to understand, and we have real discussions about what's really going on compared to what might be going on that media and everybody else tries to play games with. So that is what's going on there. Let's see, what else can we say about that? I don't know about too much more. We can just keep on taking a look at the different products. I can answer pretty much most of the questions. If I don't know the answer, I can find the answer because I've been around a long time. Daniel, what's happening? We got a happy house here today. It's a webinar of thought and ideas. Daniel instigated the last new technical tool that we've added to the J4X chart, and we've removed the old-fashioned rate of change one right there. You never know what a question can do, where it can lead to with me. We can, because I really fight to find accurate data. I belong to a bunch of science groups and especially physics science groups, and there's one that's philosophy and physics, and they're always fighting with the idea of what's real and what's not. What's proven and what's not proven. Do you see any effect of daily politics in related currencies? Used to, not as much as we do now, and not as much today. I think that the central banks keep the currency pairs / triads. I think they definitely keep them in a channel. I think they're really fighting all the time to keep these products under control. So we don't see, decades ago. First of all, things are really crazy here in the States. The leftist media has full control now of communications. There's rioting going on in some of the outer cities, and the politicians are supporting the rioting. They're in opposition of Mr. Trump, and so there's a lot of strange things going on. But the markets overall have become manifestations of all the central banks across the planet. So they don't really have as much of an influence as they used to, and also banks themselves. Look, if I would have said to you 10 years ago, let's see, where are we at now? 2020, right? Okay, so it was past 10 years now. If I would have said to you 15 years ago that Lloyd's of London would be out of business, or Merrill Lynch would be out of business, or Bear Stearns would be out of business, or Santander would be out of business, or Lehman Brothers would be out of business, or Bank of Scotland would be out of business, or HSBC would be out of business. If I would have said any of those things were going to be out, or Wachovia would be out of business, or Citibank would be, mainly owned by the Federal Reserve, and it's trading at bankrupt prices. If I would have said any of those things to you 15 years ago, you would have said it's impossible. Okay? But they happened, and they exist. And so look at our markets. Our markets are stable because the central banks have basically become buyers of last resort instead of the investors. And the investors are begging for profits, so they join in as best as they can. But the era of the markets being a reflection of the private sector are not around at the moment. I guess that's the best way to describe it. So now let me see. Daily says, so Stefan says, is the currency strength indicator standard in Dukascopy useful, or do you never use it? I don't know what it is, but we can look at it. So which standard? Let's see. So the currency strength indicator. Let me see if we can find it. So I go underneath FX here, and I add an indicator. And what's it called? The recent. Let me see what that is. The standard is it strength indicator? Where is it located in? Volatility, statistics functions, overlap studies. Where is it exactly located? We'll take a look at it. I've taken, like I've shown you. Let me just cancel that for a second. I've taken a few indicators that I trust and I've put them in there, but I don't know that particular indicator. But we can look it up, and I'll hunt it down with you, and we can see if we can make any strength understanding out of it. Let's see. Also, let's see, useful or not? Okay, and then Audie Diamond says, I see the U.S. media is 95 left biased, no riots. Yeah, I know. They say Nadler said riots are a myth. Yeah, I know. Isn't that funny? I know. It's crazy. I think that the left in our country is making a major mistake. They're going to get wiped out. I've been referring to it as the death rattle. You know, when someone is very sick and old, or sick and they're dying, and there's a death rattle before they die. You know, they make these sounds. I think that's what we're hearing from the left. They're getting ready to die. You use search quick filter. Okay, let's go to search quick filter. Search. Let's see, where's search? Where's that? Let's see. Zoom. Select custom range. Patterns overall. How about if I make it bigger? Will it show the search? Let's see, search. There, or just go into here. Do I go into here and spell it into that? Let's see. Oh, great. I appreciate that, Stefan, because I like to look at it. Search quick filter. Which one's like in the box here? So strength. Let me think. Where's that at? Let me find it again. Strength. A strategy. Strength indicator. Okay. So strength indicator. In there? Like that? Unsubscribe, subscribe. I don't see that. Let's see. Is there a box for it in here? Indicators. A quick search. There it is. Okay. So strength indicator. Okay. Thank you. So STR. Let's see. Let me get this spelled right. STR. We'll find it in a second again. There it is. Strength. STREN. Relative strength. Okay. GTH. Strength. What was the other side of it? Strength indicator? Indicator. Not jumping out yet, is it? And let's see, strength indicator. DICA indicator. Strength indicator right there, right? Let's see. Strength indicator. Okay, I got it spelled right. Right? Yeah. All right. Now let's hit enter and see what happens there. Let's try that again. Nope, not across. Strength indicator. Nothing's coming up at the moment. Let's see if we can find it in here in the list. Recent, let's see, all added indicator. We'll just go into different groups. So statistics, nothing there. Williams, nothing there. Cycle indicator, nothing there. Math operator, nothing there. Math transformer, vectors, no. Indicators, average distance, random, nothing there. Overlap studies, nothing there. Pattern recognition, nothing there. Price transform, not statistical functions. There we go. Maybe in there. Linear regression is always entertaining. Standard deviation is nice. Linear. Not there. Not there. Not there. Let's see. Filter. Let's try it in the filter. So strength. Indicate momentum indicator. Momentum indicator. There's a momentum indicator. So nothing there either. Alphabetical. Nothing there. Add a custom. Advanced. Let's see. Strength. Indicator. Are you sure you're not thinking like momentum indicator? I mean, I'm sure there's a relative strength indicator. I remember that one. Let's see. There is an indicator called Murray Math. Yeah. But it's not in Dukascopy. I think it's a Momo. He's been around for a while. It's okay indicator. I think I saw it years ago. It's not that impressive. It's okay. But let's take a look at it. Let's see if we can find it. It may be on. Let's see. Let's see if it's in this. Where am I at here? Let's do this. Insert study. Let's see if we can find it. Murray indicator. No, there's momentums. No, I don't see it in there. But it's it could be it could be there's a lot of indicators, and there's relative strength, and there's momentum. So let's see where else are we at. I'm going to make sure I'm answering everybody's questions in there. Is the currency attempt indicator standard Dukascopy useful, or so we don't really can't find it to be able to tell you. I see that the U.S. we got that. Use search, tried that. I'll open up my laptop. Cool, for the exact name. Let's see. Sebastian says in FX icon. FX icon. FX icon. Let's see. Add an indicator. We did this in there. FX icon. Like that. Like that right there, right? Oop. FX icon, that one there. What that one? There we go. And nothing there. What's that? Indicators? Oop. What did I do wrong there? Can I back my way out of this? Escape? Uh-oh. Uh-oh, Rorge. I wiped out my indicators. Where'd my indicators go? Alright, so we got to put our indicators back together again. So we're using Hinky, Ashy, something or another. Let's see, if I go like this, it'll show me recent ones, right? Recent indicators. So we use that. There we are. We're back together again. Now what is this down at the bottom? Oh, I see. I can just remove that. There we are. There we are. We're back to ours again now. Let's see. It was already the FX icon type strength. CSS, like commodity thing, as lowest. Let's see. I've used those throughout the years. They're all right. There's an indicator called Murray Math Oscillator, but it's not there in the Dukascopy. Okay, it was already there. The FX icon type strength. CSS. Okay. Let's see. Let's try this. Or should I go? What is that? Quick search. Quick search. FX icon. Quick search. And that is CSS. Shift CSS. Oh, I just had it and I just blew it up. There it is. Currency slope. Let's see what that does. Now where is it? Is it down here below? Let's just move this up. So is this it down here? There's something down here now. I seen that show header display. There it is right there. Why aren't we seeing this? Is this it right there and it's at 02? That doesn't make any sense. That's 27 weeks back. It's all one price. Uh-oh. What did I do wrong now? Okay, here we go. Let's see what this does. I guess I don't know what it's all about here. Let's see. What's that? That. Oh, now it's on the top, but it still doesn't look like it's doing anything. See, this box is relatively empty from it. Add indicator. Can we make it larger? Arrange indicator? Bring to front? Send back? See, let me go back to looking at you guys and seeing what you're saying here. So CSS. Let's see, F4. Okay. What should I hit F4 or don't hit F4? Oh, there it is. Okay. Okay, so let's turn off most of these then, right? Because let's just like okay, so what do I want to do? I want to edit the indicator, right? So we want to take the inputs and just have one input right now. So let's go with this one right there. There we go. All right, let's match it up to what I'm using right there. So I'm using this purple line, I'm using this dashed line, and this white line. So it bottomed here, and it's rising. So that's pretty cool. Now if we contract that, like here, it started to rise here, but it took 3 more weeks to bottom, and it was rising. So I guess over time it gets there, right? You can see it topped out right halfway down this, right? Right there. You can see it bottomed here pretty good. I like the one I put together on the Dukascopy, this one, these three. But this does seem to have... Now, what do you do with all this tightness? You make it relative? So in other words, if we widen that, I mean, look at the relativeness on, who mentioned highs, new highs, and lows earlier? Basically, how do you use this with that? You see what I'm saying? Yeah, I appreciate that, Stefan. Okay. Let me make sure I'm not missing anybody's things here. You see UCS Murray Math Oscillator if you search on Google from Trading View. I've seen Murray Math. It's okay. I knew the owner of Ninja Trader, and he was always trying to get me to put my indicator on his system. And he was like, Murray Math is okay, but your work seems so much better. Pat myself on the shoulder. Silver is doing great, I think. Oh yeah, yeah. Silver's been rock and roll. We called that. We've picked up on that very well. That was pretty good. So CSS, that's cool. Takes a minute to or load. See what I'm saying? It looks okay. It overall catches a lot, but look at, like, let's see if we can put a line in here. Like, look, when it topped, say like right there, you're almost at the bottom by the time it tops. I mean, there's the top. You see our work. Whoop. So we can move this line over. Let's add another line. So following the indicators that we developed with Dukascopy, it's basically saying that it's moving down here. The CSS, it tells you here, right? So it's kind of late to the party. See that right there? Then it gives you a bottom here. Let's see. Let's grab another line. So you got all this action down here at the bottom, and finally it gives you a bottom there. And our work is already taking you up and caught this move on the upside. It's caught the top of it. It's moved down. So I guess if you're, I don't know how to describe that. I think it's a what they call a lagging indicator to CSS. I wouldn't be too aggressive towards it unless you're trading like option spreads or something like that. 6-month option spreads. I would say that's about the safest way to trade that indicator is with 6-month option calendar spreads, or not calendar, I'm sorry, vertical spreads. That would be the only way I would try to even dare use that indicator. Does that make sense to you, Stefan? I don't know if you guys are into the option world. Doc here has been using options since 1980 something, since 79 and then 78, but actually a member of an options exchange since 1980s, early 80s, like 81, 82, and so forth. So I hope that answers your question there. I like our indicator that we use on the J4X. It's much more articulate. It compared to that one on the bottom. Let's see. Have you tried linear regression in analysis? Yeah. Nah. Yeah. Linear regression. But we can put it up there. Linear regression. Let's try that. Recent indicator. Added indicator. Okay. Linear regression. We saw something where it was there was a bunch of linears. I use a lot of non-linear indicator. My indicators are more non-linear on some level, so I'm kind of moving the opposite direction of it. But we can take a look at it, and we can take a look at my indicator at the same time. Okay, here's linear intercept, linear regression right there. Now the question is where? Oh, okay, it's the line on there, right? Can we make that thickerish? Edit indicator. Let's see. Price, close. Can we like change? Okay, so how about if we make it white? Style or yellow, something like that. That would be fun. And trend up is like blue. Let's make it like that, and then make it thickerish. Okay, here we go. That's kind of interesting. So right now it's just curving over the last day or two. You can see here our white line. Let's see, where's it at? Alright, so our work broke down here, I guess it is. Right? And then it bounced back up again. And then it broke, I guess now it's just breaking here. And you can see how it's done this. That was kind of interesting. I caught a good trend. Let's take a look at that. Let's remove these. Remove. How do I remove that? Remove. And this one we'll remove. And remove that one. And then let's take a look at it compared to here. Again, our work broke down here. It's much faster than the other thing. That's CSS, that's for sure. Right here, our work broke down here. It almost became yellow the next bar, so that's pretty cool. Um, Seems to be locked closer to the Hinky Ashy. You can see it breaks on the upside here. This is interesting. I hope you're all liking this. There we are. Let's see. Now let's take a look at that. Have you tried linear regression 13 period? Oh, 13 period. Okay, so let's put 13 in there. Format. Where's it at? Edit indicator. Which one do you want? 13? 13. There we go. Still the same way there. You can see here, it's following our work very well. But I still like our work. We see more moving parts with our work on J4X here. See that? Like right there. You know, our work shows the topping action with that point and breaking down. And this is still moving up, but then I guess a day before it does catch it. So that's pretty cool. Yeah, that's a better tool. I see that. I see that's a better tool. But I still like ours. I'm using the slow stochastic commingled with a fast stochastic commingled with a standard deviation bandwidth. That seems to be a little bit just a little bit better, not much. Let's see what else we have. Stefan says, now I see the difference with yours. I appreciate your time. Now I'm trying to set up your indicator on my chart. Okay, good. Yeah. And then what it does is, imagine this. It emulates my math here. Let's see if we can do this. Now you can see my math here. Let's see if we move this up so you can see it. So you can see it emulates my math. I guess if we go over like this, move it over, something like that. You can see this action right here. You know, my math broke down here, gets you in, you know, out of the trade way even more earlier than everything else. And so that's why we did that. Let's see if we can do this right there. So you can see, like, we went into a cell. Now, where's my cell lines? What's up with that? They keep on disappearing. I thought I had them all in there. Let me just double check I have the right product. Oh, that's Euro GBP. That's what that is. Okay. And what are we looking at here? We're looking at Euro dollar. Euro against the dollar. Let's see. So let's switch this over again. There it is right there. Okay, so you can see here, we break down with that just like this, which is a lot better. You still got a blue line going on there. And then you can see here, this breaks down again here, and you can see the little pressure we have today from it. But again, we're in the weekly trend. Look at the white line, so far away from our what we refer to as our non-linear time manifolds. Let's make them a little bit thickerish. Okay, that's cool. So notice it can become a zero line on some aspect. You get the weakness in here. You get a couple days of weakness, but you can see it's still trying to climb, and then you see ours goes and challenges the weekly number, and you end up with this sell-off there at the same time, or vice versa. Our math picks it up, and then it lifts right out of it again, and we get the dots and everything moving up, and then we're using Hinky Ashy to compensate for the dots, which move about 70 some odd percent. Okay, what do we got here now? So 13 period, I'm trying to set up, okay, excellent. For refinement, 13 period Fibonacci number. Okay. And the best idea for today I found is gold against the silver against the dollar. Buy dollar yen, sell. Oh, that's cool. You're playing with that Chinese thing, really? Oh, good luck with that. NZD dollar buying Bitcoin. Wow, that is wild. Let's take a look at that. That is wow. What an I could see how you could call that an arbitrage. Oh my God, That is really cool. That is, you are really trying to lay off a lot of risk in a lot of different ways. But remember, if you're not using options, risk is conjecture. Okay. Uh, Only way, in other words, if you're not using options to do the hedging, then everything else is just a gamble, a much more gamble. Options don't. You can gamble with options if you want, but options are a legitimate, most efficient, uh, tool. I mean, they are the best. There's no doubt about it. They are the best. Options on the underlying product are the best, and there's nothing to compare to it. When you do pairs trades, you have your inverse relationships, and you're hoping that those inverse relationships stand up. In other words, they stay, with integrity. But it's not necessarily going to be that way. So you have to be very careful when trying to use a lot of the arbitrage hedging techniques with the other products, because it's not as, you could, imagine, think of a simple one. You buy the underlying product, you sell the call, right? So now what you've done is you've hedged on a very short envelope, or window, the underlying long, just a little bit. At the same time, as it rises, you don't gain as much on the appreciation, but again, then you're not feeling the pressure of the down move of it. So let's see. Oh, sure, we can go over to Mexican peso. So that's the. Oh, you mean Mexican peso is part of that arbitrage you're playing with? Wow, that's cool. So you're. Let's see. So let's take a quick look at that just for the fun of it. So you're. Let's see. So silver is acting like an inverse to the dollar at the moment. So if you're long silver, in essence, you're short dollars. So let's take a look at that. So here's silver. And so you can see here, silver sold down on Friday, and we're in a daily sell, but it popped today, and it's still fighting to try to go up. But the red dots there, and these lines are below. But look at it. The white line on the time manifold on the weekly is holding up really well. So there's not much selling there. It's just a little profit taking that occurred. All right. So now your next thing is, let's see, dollar yen. Well, dollar yen seems to move with the dollar. So if the dollar is going down, that product is going down. And when dollar is going up, it seems to be going up. So that's that. And then I'm not even sure about the China. I honestly don't really pay attention to the Chinese currency because it's not a tradable product as far as I'm concerned. In other words, there's less than 1% of it used for world trade, so it kind of makes it not much of a product. I don't even know how much Aussie is, but it's got to be more than 1% of world trade. All right, so then let's go on to the next product in there, New Zealand dollar. Okay, and so you're buying that, so that means that you're short dollars again, and then Bitcoin. That's kind of like a placebo or an alternative to gold. It does a much better job of it, that's for sure. And ETH is the same way. So you have two cryptocurrencies in there. Is that like a slow moving crypto versus a fast moving crypto? That's kind of interesting. I'm not doing arbitrage. I just look at the charts and rate the ideas. Oh, I see. That makes sense. And then see if you can get a direction out of it. Top three ideas are silver buy, okay, yen sell, that makes sense, and Mexican peso sell. So that would, let's see, selling the Mexican peso though makes you long dollars, right? And then and at the same time you're selling dollar yen. So I guess you're long dollars there, and then you're kind of short the silver. I mean, not short it. You're long the silver, so that makes you short dollars there. That's kind of interesting. So they're the three best trades. Two of them are going one direction, and one's going the other direction. That's not bad. That's a possibility. That's a good thing. Good trading thing. So let's take a look at Mexican peso. We haven't looked at the peso lately. Peso. There it is right there. Now you can see here it's been in a sell a little bit for a while here, and it's just bouncing back up again. And then on a weekly, it's been in a weekly sell since here. But it hasn't really gone anywhere. It went down, then it's going up, and pretty much sideways at this point. Let's take a look at it in the J4X. Dollar Medico. Right there. Interesting. Those greens and yellow lines are kind of fun. But I still like looking at it the way we do. Because the dash line in many ways is like the zero line. And the purple in some ways is also like the zero line. See that, you know, in our math here. So in other words, so you have these two things going through the zero line, and then you see them break down. They go down in value. You see when they do it there, you see the pressure. And then vice versa. You see when it tries to climb up, it didn't last long, but it was relatively firm, and then it breaks down. And then it makes lower lows, that type of thing. Let's see if we can scrunch that up a little bit. Yeah, see, like, look at that weekly buy. It took you to nowhere. And then the weekly sell, which was interesting because you can see it first went into the sell up in here. Then it went into a buy there, and it went right back into a sell here. And then you had that nice drop. So that's interesting. Let's see, blue-yellow moving average. What is useful for on Dukascopy? That's the first time I ever looked at that. I like what I use here on Dukascopy. I like, let me see if I can move this up. I like that. So I use the fast-moving stochastic, which is the white line. And then I use the slow-moving stochastic as the yellowish dashed line, or goldish dashed line there. And then I'm using the standard deviation bandwidth there, which is, you know, much more efficient. So treat these two almost like zero lines on my math, like that. Treat them as the zero line. And what they are is they're non-linear the way we're using them because they're fluctuating and moving in different neighborhoods, I guess you could say, or sets. They're definitely different groups. It's relative. It's very relativic, you know. It's truly relativic the way we're using them. I like it. I think it's pretty cool. All right, I got to get out of here, traders. Let's see. Blue yellow line was yeah, that was the linear regression. Let me just double click. That was kind of interesting. Let's see. Yeah. No. Maybe. Here, let me just click on here. Where's it at? Go like that. Recent indicators. What is that? Yeah, linear regression. There it is right there. Linear regression. Let me do that again. How did I get it there? There it is. Linear regression 13. That's what that is. That's kind of interesting. I still like the way I used the Dukascopy other ones, but so no problem. This is Doc from North America. We will catch you later. Signing out, over and out. Happy trails to you. Until we meet again. Happy trails to you. To all our